Hey, if you've just bought a home in Florida, listen up. There is one money-saving tool you absolutely positively need to know about. So let's dive right into the Florida Homestead Exemption and figure out how it can save you a ton of money on your property taxes year after year.
So, what's with this number? $50,000. Well, this is the magic number. It's how much you can potentially slash from your home's taxable value. Think about that for a second. That's a $50,000 discount before the government even starts to calculate your bill.
So what is it, officially? The Homestead Property Tax Exemption is basically a massive tax break designed specifically for Florida homeowners. All it does is lower the value of your home that can be taxed. The result? A smaller property tax bill for you. It really is that straightforward, and frankly, every eligible homeowner should be taking advantage of it.
All right, so here's our game plan. We're going to cover how that $50,000 break actually works, the critical deadlines you can't miss, who qualifies, how to file step by step, the common mistakes to avoid, and we'll even get into some advanced saving strategies.
Okay, first things first, let's break down how this $50,000 reduction actually puts money back in your pocket. It's not quite as simple as just subtracting $50,000, but, it's pretty close.
Now here's where it gets a little interesting. The exemption is actually split into two parts. The first $25,000, that applies to all of your property taxes. That includes schools, everything. The second $25,000 only applies to the slice of your home's value between $50,000 and $75,000, and it doesn't apply to school taxes. But here's the key takeaway. For most homes, you're going to get the full benefit. And please, please, please burn this into your brain. This is the single most important detail to get right. You do not file this with the tax collector, the office that sends you the bill. No, you have to file your application with the county property appraiser. They're the ones who determine your home's value. Get that one right. Property appraiser, not tax collector.
Next up, let's talk about the calendar. There are two dates that control this entire process, and trust me, they are completely non-negotiable. If you miss them, you have to wait a whole nother year to get your savings.
And here they are. First, January 1st. That's the qualification date. To get the exemption for the year, you have to own the property and be living in it as your permanent home on January 1st. Second, March 1st. This is the filing deadline. Your application absolutely has to be submitted by this date. So, a simple way to remember it, be settled in by New Year's and get your paperwork filed before spring.
So, are you eligible? Let's quickly run through the checklist. The good news is the qualifications are really straightforward, and most people who own and live in their Florida home will meet them without a problem.
It really just boils down to these three things. 1, you have to own the property. 2, it has to be your permanent primary residence, so not a vacation home or a rental property. And 3, and this is a big one, you can't be claiming this kind of tax break anywhere else. Not in another state, not even in another county in Florida. The rule is simple. 1 primary home, 1 exemption.
Okay, here is a pro tip that will save you a massive headache. The property appraiser's office will verify that you actually live there, and the number one way they do that is by looking at your driver's license. If the address on your license doesn't match your new home's address, that's a major red flag for them. So seriously, the minute you close on your house, go update your license.
Okay, so you qualify. Awesome. Now for the most important part, the action plan. Let's walk through your step-by-step guide to actually filing for this thing and locking in those savings.
Now, before you even start the application, do yourself a favor and get all your documents together. Think of this as your filing toolkit. You'll need a Florida driver's license or ID with your new address on it, your Florida vehicle registration, and your voter registration card. Also have your social security number handy, and if you're not a U.S. citizen, you'll need your permanent resident card.
The process itself is surprisingly simple. First, just go to Google and search for your county's property appraiser website. Most of them have an easy online filing system these days. You'll fill out the application, it's a state form called the DR 501, enter your property and personal info, upload photos of your documents, and hit submit well before that March 1st deadline. Then, just keep an eye on your email for a confirmation.
But you are not done yet. This is the final crucial step. Later in the year, you're going to get a letter in the mail called a Notice of Proposed Property Taxes, and it's often called a trim notice. You absolutely must check this document to confirm that your homestead exemption is listed on there. That is your proof that everything was processed correctly. Now, let's talk about what can go wrong. There are a couple of very common and very costly myths that trip up new homeowners all the time. Knowing these will put you way ahead of the game.
Okay, the biggest myth by far is this idea that your mortgage lender takes care of it for you because they handle your escrow account. That is absolutely false. Your lender has nothing to do with this. It is 100% your responsibility to file directly with the county property appraiser.
The second myth is all about timing. A lot of people assume the tax break just starts the moment they buy the house. But remember that January 1st rule? It all depends on who owned and lived in the home on that one day. So if you bought your house on, say, January 15th, you missed the cutoff for this year. But the good news is most counties will let you go ahead and pre-file for next year right away.
So, once you have your homestead exemption, that's not the end of the savings. Nope. In fact, it's just the beginning. It actually unlocks one of the most powerful tax protections in the entire country. It's called the Save Our Homes Cap. Starting the year after your homestead is approved, the annual increase in your property's assessed value for tax purposes gets capped. It can't go up by more than 3% a year, even if your home's market value skyrockets. This provides incredible long-term tax stability.
And the benefits don't stop there. If you decide to move to another home within Florida, you can actually take those built-up tax savings with you. This feature is called portability, and it can save you a fortune when you buy your next home here in the Sunshine State.
And finally, remember that homestead is often just the beginning. Florida offers additional exemptions for seniors over 65, for veterans, and for homeowners with disabilities. So the key is, when you file, always ask the property appraiser's office, "Hey, is there anything else I might qualify for?" You might be surprised.
So this all brings us to the final question. With all these savings, protections, and benefits available, are you potentially leaving thousands of dollars on the table year after year simply by not filing this one simple application?
Your next step is clear. Go to Google, search for your county's property appraiser, find their online application, and get it submitted before that March 1st deadline. Don't wait.